Hey everyone, Daniel here and welcome back to another video. Here today, I want to talk to you guys about cannabis stocks and the sad truth that they hold with not being able to uplist to the NASDAQ or the New York Stock Exchange in the near future. I want to segment this video off into a few main parts. First and foremost, we're going to talk about the situation with cannabis stocks uplisting to the NASDAQ or the New York Stock Exchange, exactly why certain companies cannot do it, and exactly why certain companies can. Next, we're going to go through the benefits of uplisting to the NASDAQ, the potential incentive it provides for companies, and the requirements needed to do so. Lastly, we're going to take a look at a company that is planning on uplisting to the NASDAQ, High Tide specifically, one of my cannabis investments, that is again planning on uplisting to the NASDAQ within the next couple of weeks. So if you find any value in this video whatsoever, please consider subscribing and let's get into it. This article here by Sean Williamson, it provides a very in-depth kind of look, and a great look rather, into exactly why cannabis companies aren't specifically able, or why certain cannabis companies aren't specifically able to list on a lot of the major exchanges. Since the US federal government has held firm on its stance of marijuana as a Schedule I substance, entirely illegal, prone to abuse, and having no recognized medical benefits, the NYSE and NASDAQ have stood their ground on not allowing any marijuana stocks to list on their exchange that do business in the United States. This is big, and we got to talk about exactly why right now. If you are a company within the United States, a cannabis company that does business within the United States, you are not allowed to list on the NASDAQ or the New York Stock Exchange, period. You're not able to. If you're a company that does business outside of the United States, potentially a Canadian company, a Canadian cannabis company, you are able to list on the NASDAQ. But with that comes a downside of not being able to compete in the US market up until the potential point of federal legalization, where any company can uplist to the NASDAQ, specifically talking about cannabis companies. So we're faced with a choice. Certain companies are, rather. If you're a US company, you have no option, or else essentially you're just able to stay on the OTC markets. You're not able to go onto the NASDAQ. But if you're a Canadian company or an international company, you do have an opportunity to expand within this kind of trading system to the NASDAQ or the New York Stock Exchange, but with that comes the downside of not competing in that market up until the point of federal legalization. Let's talk about this a little more here. Essentially, it's required pot stocks to make a choice. Either uplist to the New York Stock Exchange or NASDAQ and reap the rewards of improved visibility, validity, and liquidity, but kiss the US market goodbye until the federal government changes its tune, or forget about uplisting and attempt to infiltrate the US cannabis market. As a reminder, the US market would probably dwarf Canada as the largest in the world if it were legalized. Even so, with 32 states having given the green light to medical cannabis in some capacity and 10 giving the okay to adult use, there's ample opportunity for these companies willing to take the risk. This major market opportunity may simply not be worth passing up for some companies. So, it's really a situation where if you're willing to uplist to the NASDAQ or the New York Stock Exchange, you're essentially saying, all right, the opportunity that we have within our own markets at this moment in time is enough for us. And we're willing to wait up until the point where federal legalization happens. When will that happen? Who knows? Are chances elevated at this moment in time because we have a democratic power within the United States? Yes, of course. But we do know that as more states continue to legalize, which is happening every single year, there are more states legalizing marijuana. And as that continues to happen, federal legalization comes closer and closer. Once that happens, this whole argument goes away because all of these American companies listed on the OTC markets will be able to uplist to the NASDAQ, and all of the companies currently on the NASDAQ can go and infiltrate the US market opportunity, essentially. So that's the whole situation between uplisting to the NASDAQ, exactly why companies can, cannot, and the potential impacts that it has on companies that are uplisted. But now let's take a look at exactly what the positives are, the incentives of uplisting to the NASDAQ. Because when you really think about it, why would a certain company give up the opportunity to expand within the United States just for the fact of uplisting to the NASDAQ? And we have a few reasons right here. There's added validity of being added side by side with time-tested businesses on a major exchange. All the largest corporations are listed on the New York Stock Exchange or the NASDAQ. That is just a fact. Amazon, Apple, Facebook, Google, Tesla, all listed on the major exchanges. Added side by side with them, there's added validity. Not all financial institutions are allowed to invest in or offer coverage on companies that list on the OTC exchange. This, in my opinion, is the main reason and incentive behind uplisting to either of these exchanges. If you are a financial institution, you're limited in the companies that you can invest in to only major exchanges. That is only a certain amount of cannabis companies out there, and it's quite interesting that a lot of these Canadian companies, specifically the larger ones on the larger major exchanges, are trading at richer multiples than a lot of the US names. Why? Potentially because institutions are being forced to invest in Canadian companies like Canopy Growth Corp or Aurora Cannabis or Tilray, the major companies that are listed on the major exchanges. That is one of the biggest incentives. You have larger institutions investing in your companies. You have improved potentially liquidity when it comes to potentially getting loans or other things along those lines. And you also have the case of more coverage from analysts. It's a win-win-win in that case. And for some companies who maybe aren't planning on expanding within the United States, it is worth it, right? And we'll talk about the situation with High Tide in a moment. And lastly, listing standards on these major exchanges are more stringent than on the OTC exchange, again, adding to that validity and improved liquidity within the system of being listed on the New York Stock Exchange or the NASDAQ. So now we know exactly the incentive behind listing on one of these major exchanges for a lot of these marijuana companies out there. So, you essentially uplist to get these rewards in return for giving up the US opportunity, which is why you don't see many companies uplisting to the NASDAQ. Now, let's say you're a Canadian company that doesn't do business within the United States and you want to uplist to the NASDAQ. There are a few requirements, and let's take a look at these right now. First and foremost, you need a certain amount of public shareholders. Now, this number isn't explicitly said, but again, a majority of corporations out there have thousands, if not tens of thousands, or hundreds of thousands of public shareholders out there, so a majority of companies do hit this standard. Next, a minimum market cap of $100 million, a minimum share price of $4 per share, US, and at least 100,000 shares traded on a monthly basis. Those are the requirements you need to uplist to the NASDAQ, along with not doing business within the United States. Now, let's take a look at High Tide. This is one of my cannabis investments. It makes up a few percent of my portfolio, and it's been doing very well as they just went ahead and completed a 15-to-1 reverse stock split, where every 15 shares was essentially combined into one share. Why? Because they plan on uplisting to the NASDAQ within the next couple of weeks. The one requirement that they needed was a higher share price. So what they did was essentially take their shares and combine every 15 shares into one, thus resulting in a much higher share price essentially. So what we have now with High Tide is a situation where their market cap, well over $100 million. They have many different shareholders out there. It's a very retail-based stock when it comes to when it comes to ownership rather. Their share price is now well over $4 per share. Now keep in mind, this isn't Canadian dollars and the requirements here are in American dollars, but even with the kind of the exchange taken into account, the potential US market cap is in and around potentially $350, $400 million, the share price in US dollars potentially above $8. So they're hitting all of those requirements along with the needed volume on a monthly basis. They're actually doing almost double what they need to do on a monthly basis on a daily basis, which is absolutely phenomenal from that perspective. And, given all of these different things, you have a company with High Tide where, they're going ahead and they're uplisting to the NASDAQ. Let's talk about the pros and cons of doing this for a company like High Tide. They're primarily Canadian-based. They are Canadian-based with their cannabis locations. They have physical dispensaries all across Canada and are continuing to expand with these physical locations with time. Now, a big majority of their business, or rather a big upcomer of their business, is e-commerce. They have the #1 and #2 cannabis accessory e-commerce companies in North America. And this is very interesting. When we talk about the US opportunity and giving that up potentially for NASDAQ exposure, that doesn't include cannabis accessories because the accessories are legal throughout all parts of the United States. So what High Tide is doing, they're essentially saying, all right, we're going to give up the United States cannabis market at this moment in time. But what we're going to do, we're going to focus in on the accessory market within the United States and the cannabis market within Canada and internationally. This allows them to uplist to the NASDAQ and again reap the rewards that we just talked about here, and at the same time continue on their pathway of growth. Now again, High Tide is a company that I own. I really like this stock and it's done very well ever since this reverse merger was essentially completed. It's up in and around 15 to 20% since it was completed. So you really see the benefits of a potential uplisting to the NASDAQ and the potential institutional ownership that will come from that. If you want me to do a full update on High Tide, as they just did do a new kind of acquisition, let me know in the comment section down below. And yeah, if you found any value in this video whatsoever, please consider subscribing. And if you have any opinions on exactly why certain companies might want to or might not want to uplist to the NASDAQ, let me know in the comments section down below. Thank you all so much for watching and have a great day.